All right, hope everyone's having a nice weekend. I'm looking forward to this weekend market update. I'm going to go through Bitcoin high time frame. I'm going to go through SPX high time frame. I'm going to go through USDT. That's the implications for the crypto ecosystem high time frame. Then the dollar and Bitcoin correlation high time frame, and that's it. That's the video. I'm going to do The first thing I'm going to do is keep it really simple here, folks. This is a chart that I've had up for, I don't know, the better part of the last couple months, that shows us what's really going on. And it's the opposite of what I'm hearing, which is great. This is what we want. We don't want participants being bullish, when in fact high time frame structures are, uh, as bullish as they've been in the entire cycle off the lows, the 2022 lows. That's indisputable. No one can dispute that. No one can dispute it, because if we're defining the structures from any standpoint you want to define them, relationship between SPX, relationship between NASDAQ, relationship between itself denominated in US dollar, which is this chart on a weekly, relationship between the cloud in and of itself in USD, the 30-week moving average, the 50-week moving average. All these things are telling us that where we are now, in combination with kind of Wyckoff principles and sentiment, is the most bullish that we've been from a structural standpoint since the lows. That's indisputable. So let me go through some of that evidence really quickly. I don't want to spend too much time on going through all those things singularly, because I think I've done that in the weekend market updates. But what I want to do is compare. I want to look at two things first that I haven't done recently, and that's the alignment on the weekly simple moving averages 20, 50, 100, and 120. Okay. I've been talking about the cloud. We've been watching that. We're not in it. We're looking at the 50-week moving average, which is something we've respected. Let me get rid of the others. We tested it and had a reaction where we'd expect. That hasn't been breached on a weekly basis since March 2023. And then the overriding structure here is, and this is the Wyckoff structure. And even if we don't want to call it a Wyckoff structure, if we're not that into that, and we need volume confirmation, what volume confirmation? We should know that markets evolve. And I've had a few comments on needing volume confirmation. I've got volume up here. When we broke out of this smaller reaccumulation range, sign of strength, and went into expansion, what did volume do? Volume didn't do anything, okay? Volume only came in at the top end of this after a 3x move. So if you were waiting for volume and couldn't recognize the Wyckoff structures in here on decreasing volume, good luck. You missed that move. Same goes for the previous macro expansive phase, where if you were waiting for volume was relatively flat the entire way. We don't see any average volume bars above that mean until where? The very end. See that? Here's where volume came in above the average before it. And what did you miss? The entire expansive phase. So we need more than just that. Okay, we need more than that. We need to be utilizing the things that I focus on, which are structures, global liquidity, which I've been talking about. I'm not going to talk about today. Elliott wave structures, trend analysis. And so looking at all of those things combined today, where we are, and I see a few people thinking, we're somewhere in here, right? This is the before the big drop. Well, I'm sorry, but there's no evidence of that. What's the evidence? Let's take a look at the rest of the long-term moving averages. So I'm throwing up the 20 in green, The 50 is in light red, the 200 is in dark red, and the 100 simple moving average on the weekly is in blue. When we got to the point where this market was bearish, so we're going back to March of 2022, what do these long-term moving averages look like? What do these long-term moving averages look like? Well, you didn't have, let's just keep it simple, bullish alignment. What's bullish alignment? The fastest is on top, the second fastest is on the bottom, the third fastest, okay? And then the slowest is on the bottom. So 200, 100, 50, and 20. We had alignment all the way through and up to March 2022, okay? Where the 20 then crossed under the 50. And what else did we have? We had close into this cloud, which I keep saying, we got to keep an eye on. We've got to keep an eye on the relationship between I look at the 30 and I'm looking at the 50 very closely, and price action. This was a bear flag into all of that with bearish alignment for the first time showing up. That was a warning signal that then led to much further down, okay? Much further down. Let's superimpose that concept with what's going on right here. We don't have any of that. We don't have any of that. In fact, it's stronger. It's stronger now than it was back then. Why? Because of this. Because of not only do we have 20, 50, 100, 200 alignment. We have a green cloud. We're not in it. We saw a reaction at one of the important MAs that hasn't been breached on a weekly basis. And so why is the assumption anything other than continuation in the direction of the trend, which has been established from an alignment perspective back in October of 2023? That's the market doing its psychological work on its participants. Now let me get rid of those MAs. When the macro, I don't like using that word macro, it's overused. When the larger time frame structure is one of the largest reaccumulation structure Bitcoin has seen, quite frankly. I posted a chart in the subs earlier today with some revised targets, higher end targets. This is the largest reaccumulation structure we've seen in terms of time, in terms of compression. That's what's going on here. And when we think about reaccumulation structures, what are they? They're long corrective phases. Okay, they start out as long corrective phases. In this case, we had a large A, B, and then a C wave, and then a new impulse, 1, 2, okay, 3, 4, and I'm contending the start of 1, 2, 3, 4, 5, extended fifth wave. But essentially, let's just do this before I go back to this. Let's compare this to another reaccumulation structure. So when we're saying we think we're somewhere here, okay, because I see a lot of comparisons to this area. Okay, maybe just one more move up, right? No cloud breach there. Or we're here. You're not respecting this, what this is. You're not respecting this, okay? You're not respecting this. You're not respecting a high time frame A, B, C, a high time frame 1, 2, 3, 4, and the largest reaccumulation timing consolidation that we've ever seen in this asset class. You're not respecting it. What was our last reaccumulation structure? Okay, and it's very common for the B wave high to set the ceiling of the larger time frame reaccumulation structure. Where was the B wave high? The B wave high. The B wave high here. A, B, C, B. This was a high, and what happened? We had a lot of work to do around it, right? Consolidation in and around it, above it, below it. Okay. Where was our last big reaccumulation structure? It was back here. I've got it right here, where we had a buying climax, an A, B wave in terms of a triangle, B, C. Okay, where was the B wave high? It was this A wave within it. Okay, this A wave within it. Look at what it did. Basically, the larger structure B wave high was that A wave within it. But look, ceiling, ceiling, spring test, okay, automatic reaction, LPS, creek jump, sign of strength, LPS. A lot of work done in this region, a lot of work done in that region before it underwent accumulation. So if anything, we need to be comparing our current price action in terms of positioning in the overall larger time frame reaccumulation. We need to be thinking more of here, folks. We're closer to here, okay? We're closer to somewhere around here or somewhere around here right after it broke out, which preceded a 5x move in Bitcoin, okay? Preceded a 5x move in Bitcoin. That's what this entire structure in essence was. If I'm looking at, this was a blow off top. That's a deviation in the form of a buying climax. Get rid of that, okay? Get rid of that. Here's the massive reaccumulation event. Same concept. Massive reaccumulation event. Same concept. Massive reaccumulation event, okay? We aren't here. That was the beginning of the reaccumulation event. We are actually, in my opinion, and I could be wrong again, folks. Remember, I'm not a financial advisor. I normally do this up front. I don't know what's going to happen next. Market, these things could go up, they could go down, they could go sideways. I have my belief and my conviction, and I'm just here for a different perspective, for, do your own education, non-investment advice, all that good stuff. But again, with that being said, my belief here is what's setting up is the opposite of what everyone's thinking. And so even the bullish targets, I think, are going to be, most of them, far too conservative. The bearish targets, I like seeing them and hearing them. And the doubt all the way up is fantastic. But man, that went a lot longer than I really planned on for the intro video. So we're going to get through. I'm trying to do these videos under 25 minutes now. SPX. So nothing bearish about Bitcoin. Do we go down? Do we do another low test? I don't think so. I don't know though. It could happen. I posted a couple charts recently that still look to me that the lows are in. Really do. Do we have a little digestion here before our next move up? Maybe, but for now, my thought is the lows are in. All right, next. SPX, any claim that this is a bear market rally? I'm just going to keep this really simple, folks. A bear market rally that will fail, or a complacency shoulder is developing, is pure speculation. You're speculating on what's going to happen next in the context of a massive bull market. That's all we're doing, is you're speculating. Give me evidence. There's no evidence. Right now, we simply have 1, 2, 3 wave move into the cloud that was reclaimed at one of the most bearish times in terms of positioning, in terms of sentiment that we've seen since the COVID lows. That's all we have. That to me is a setup for the opposite to happen than what people are telling me. And all the reasons, I don't like reasons either. Don't give me any reasons why things need to go down. That doesn't work. The market discounts these reasons far ahead of time than you or I. If anything, it's a reason for the opposite to happen. I submit that when, in fact, this market turns into a secular bear market, no one will know. There won't be any good reasons when it starts, and it will be mass, and it might be mass for a year. It might be a situation where the market is negotiating for a good year. No one knows what's going on, and it's a pretty euphoric or bullish time. And we stop hearing these calls for bear market or tops, and it just kind of slowly develops, and we look back and say, wow, that was the start. It wasn't obvious. Not at a time when it's everyone's shouting, this is the reason, and this person is doing this, and that person is doing this, and it's going to send the markets down. I'm sorry. I obviously could be wrong, but not happening in my opinion. Not happening in my opinion. In fact, I think it's setting up for the opposite. I think that's setting up for the opposite. Now, give me evidence, and I'll look at the evidence, and I'll be objective. Where was the evidence back here of a trend change? Let's just do this exercise. I've done it a couple times. It's really simple. It's not all that complex. I'm not that great. Like, this isn't that hard to do. Our first trend change came off of a, right, 1, 2, 3, and then a failure here, and then the market went lower. I care about where the failure came, okay? Where did the failure come? So we have a pivot low I'm going to make that bright. 2, let's go 3. I'm going to go, okay. So we had a low. The market sold through it. Boom. The following week, rallied up against it, yellow, fail, okay? And then came into the cloud. This is where we are now, folks. This is where we are now. I'm going to fast forward and show you what I'm talking about. From a structural standpoint, this is where we are now. So, and back here, by the way, no one was calling for a bear market. I did this exercise a few weeks ago with my fear and greed up, and no one was fearful here. No one was fearful here. But what did the market do? The market set people up. How did it do that? See that yellow mark? See the, I believe this is the 30-week moving average, simple moving average, 30-week, that pivot high, swing failure, okay? It went up to that level, rejected there in the 30-week, and then we broke structure, okay? We broke structure. That was the beginning of the downtrend. Let's superimpose that to what we've got going on right now. What do we have going on right now? We have the first component, and that's it. All we have is we have a level in yellow, okay? Sorry, yellow, that the market sold down, attempted to come back up, rejected, and then down cloud, and then we're back in the cloud. So what would I need to see in order for me to say, you know what, we could be starting a larger time frame bull correction, because the other metric I look at would have to be hit. Gone into that more into the members and subs. But if that weren't to be hit, I'd be open to a bull market correction. If this happened, what happened? Up here, 30 weeks coming down, this level gets rejected, and we're back in the cloud, okay? That's bearish. That would be bearish. That hasn't happened yet. So you're speculating that's going to happen, and we have all this fuel as to why it should happen. So do I really think it's going to happen while everyone thinks it's going to happen and we have all the reasons? No, actually, it's the opposite of how I think. I don't think. I don't think that's going to happen. And so that would be the break of structure. And then, 30 weeks coming down, cloud continues to turn red. This is what people are speculating is going to happen. But there's no evidence. You just have one piece of the equation. You don't have multiple pieces, at least 2 more pieces of the equation that you'd need to make a claim like that. So the more I hear bear market rallies can be very vicious in bear markets, or the better. They're making a statistical claim. I get it. 20% is considered bear market territory, but I think that's misleading. I really do, because in the context of the secular bull market, we've seen plenty of those, and they've been bull corrections. USDT weekly chart, folks, shaping up. Weekly doesn't close for 6-7 hours here. I'm recording this video at 12:30 Eastern for your information. It'll be released later to the public this evening. Now, what do we have going on here? We've got the 100 moving average, which has acted as the ceiling this entire time. We've got the Ichimoku cloud, and last week we broke through both, okay? We don't want to see continuation of that. And so the following week is the week you look to confirm things like that. So if my trader hat's on, I'm saying I need this thing to, in terms of my thinking that the bottom is in and we're moving higher, we need to see USDT DOM come back in under the cloud, under this 100-week. That's exactly what's going on right now. That's exactly what's going on right now. So far, so good. Want to see this weekly close underneath this cloud. And then I think that gives us a chance Bitcoin doubles pretty quickly in short order. So that's looking good. Dollar Bitcoin is looking like it did. I'm not going to spend a ton of time on this, but we've got these macro ranges on the dollar. This is a monthly chart. These macro ranges on the dollar, okay? Buying climaxes into them. Buying climaxes into the range. At the end of the range, when you think there's a new breakout, when you think there's a new breakout and it fails, that's an upthrust after distribution. That's not a new trend. That's a failed continuation of a distributive redistribution or distribution. And I think that's what's going on right now. I've been claiming I'm expecting a big move down in the dollar. We've got it in the last couple of months. We're breaking these range lows. Does that mean we just dump? I don't know. We could get some consolidation here back into the bottom of this channel, sign of weakness, and it can keep going. I don't know. I don't care. I'm not looking at, what I should do with Bitcoin based on this chart. I'm just noting very, very strong correlations that have occurred back in June of 2017. Okay, circle uh, July of 2020. What did Bitcoin do following June of 2017 and July of 2020? Were those good times for Bitcoin after these up thrusts? And what moving average do I have up here? The 30-month simple moving average were failed. Well, we got a 7x in Bitcoin there, and we got a 5x in Bitcoin there. And so here we are with the 30 failing. You're falling out of the bottom of the cloud. And so my assumption here is that should this correlation follow the same correlation as before, we have a multiple X situation coming up for us in Bitcoin. But again, history just because it happened that way before, this isn't something that I would say, oh, I'm going to do something because of this presentation. No, I'm holding Bitcoin. The attempt is forever. I'm just doing this to share what I believe are strong correlations and what I believe could happen in the short term. So, folks, that's it for the video. Hope you have a great rest of the weekend. We've got some more content coming out for the subs and the members all week. So we'll keep doing those videos as well. Take care.